Most investors fail not because of the market, but because they can't master their emotions. If you found value in this message, consider subscribing. We explore Charlie Munger's rational wisdom every week, helping you think clearly about wealth, patience, and long-term thinking. They say your first million is the hardest. And they're right, but not for the reasons most people think. It's not hard because the math is complicated or because opportunities are scarce. It's hard because human nature itself becomes your greatest opponent. You're impatient when patience is required. You're greedy when caution would serve you better. You want shortcuts, secrets, some fancy formula that transforms pennies into prosperity overnight. And Wall Street, being the magnificent casino that it is, will gladly sell you every illusion you're willing to purchase. But here's the truth that most people spend their entire lives avoiding. Getting to $1 million isn't fundamentally about IQ or intelligence or even being particularly clever. It's about character. It's about who you become during that long crawl toward financial independence, and whether you can make that journey without blowing yourself up in the process. Charlie Munger understood this deeply, perhaps better than anyone in modern finance. He wasn't born into wealth. He started with almost nothing, shoveling through lawyers' paperwork and living through the Great Depression. You learn humility when you've witnessed breadlines. You also learn something else, something darker but equally true. You learn how many people absolutely ruin themselves chasing what they can't afford to wait for. The intelligent investor's road to 1 million is boring. It's painfully, almost unbearably boring. It's the path most people can't walk because it doesn't flatter their ego or provide exciting stories to tell at dinner parties. The first step is simple but deeply uncomfortable. Stop trying to act smart. You're not trying to outsmart the market. That's a fool's errand. You're trying to outlast it. The market will test your patience, your emotions, and your ability to sit absolutely still while everyone around you is doing something spectacularly stupid. The second step is equally unglamorous. Save like your financial life depends on it, because it does. Not a little extra when it's convenient. Not just the leftovers after you've enjoyed yourself. No, you save until it genuinely hurts, because capital is your ticket to the compounding machine. Without it, you're just another spectator in the financial circus, watching others build wealth while you remain on the sidelines. What's the biggest financial mistake you've learned from so far? I want to hear your story in the comments below. When people asked Charlie Munger how to get rich, he told them something so simple it sounded like a joke. Spend less than you earn. Invest wisely, avoid debt, and repeat for decades. They thought he was being coy, holding back some secret strategy. They wanted magic, some hidden key that would unlock rapid wealth. They didn't realize that boring discipline compounds faster than genius ever could. Let me give you a dose of arithmetic that most people never truly absorb. If you save $10,000 a year for 30 years, and you earn a modest 10% annually, you end up with roughly $2 million. There's nothing sexy about that calculation. Nothing thrilling or Instagram-worthy. Just time, consistency, and a stubborn refusal to do anything catastrophically stupid. But human beings can't stand boredom. We're wired for action, for drama, for the feeling that we're doing something important right now. So people trade constantly, speculate wildly, chase meme stocks, listen to self-proclaimed experts, and then wonder why they're still broke after 20 years of apparent effort. It's not intelligence that separates winners from losers in this game. It's temperament. Charlie Munger and Warren Buffett never tried to predict markets with any precision. They just tried to stay rational when others weren't. And that simple discipline, maintained over a lifetime, creates an enormous edge. Most people dramatically overestimate what they can accomplish in a single year and catastrophically underestimate what they can achieve in 20 years. They want the million fast, immediately, without the waiting. They end up losing half their capital in the pursuit of speed. Munger once said something that should be carved into every investor's desk. The big money is not in the buying and selling, but in the waiting. He meant every word. If you can't sit on your hands while compounding does its quiet, invisible work, you'll forever be handing your wealth to someone more patient than you. You don't need brilliance to build wealth. You need endurance and the humility to stick to principles that actually work, even when they look dull compared to what everyone else is doing. Remember this fundamental truth. The world loves activity and motion and the appearance of progress. But wealth loves stillness. Every great fortune in history was built by someone who understood when to wait and when to do absolutely nothing. The first million is primarily a test of discipline, not intelligence. It's about learning to control your envy, your impulses, and your desperate desire for excitement. So before you start chasing stocks or jumping into the latest trend, ask yourself a simple question. Do you want to be entertained, or do you want to be rich? Because the road to 1 million doesn't reward the clever. It rewards the patient. And patience, as Munger understood, is the rarest form of intelligence. Most people try way too hard to be smart. That's often their first and most expensive mistake. The intelligent investor isn't the one who discovers genius ideas that nobody else can see. He's the one who consistently avoids dumb ones. Munger said it explicitly, without any false modesty. It's remarkable how much long-term advantage people like us have gotten by trying to be consistently not stupid instead of trying to be very intelligent. That's not humility speaking. That's arithmetic. You don't need to be Einstein to make $1 million. You just need to avoid acting like an idiot when everyone around you is losing their minds. Look carefully at any major financial disaster in history. The crash of 1929, the financial crisis of 2008, the dot-com bubble, take your pick. What you'll consistently find is not a lack of intelligence among the participants. It's a lack of discipline. Brilliant people making catastrophically dumb bets because greed clouded their judgment, because they thought they were special, because they believed the rules didn't apply to them. The history of markets is essentially a graveyard of geniuses who couldn't sit still. They all thought, this time is different. And those 4 words have probably destroyed more wealth than all the wars in human history combined. Charlie Munger and Warren Buffett watched this pattern repeat itself for decades. Every boom attracted the same crowd, like moths to a flame. Overconfident, impatient, leveraged to the eyeballs. They made money fast during the good times, thought they were gods among men, then gave it all back when reality inevitably showed up. If you want to reach 1 million and actually stay there, your job isn't to find brilliance or discover the next Amazon. It's to systematically eliminate stupidity from your financial life. Start by cutting out the obvious traps that catch most people. Credit card debt at 20% interest, margin trading that amplifies both gains and losses, hot tips from people who don't have your interests at heart, day trading that benefits only your broker, FOMO investing that has you buying at the peak. You don't rise by being clever. You rise by surviving. And survival in investing means saying no far more often than you say yes. People hate that advice because it sounds too simple, too unglamorous. They want an algorithm, not restraint. They want a secret formula, not self-control. But in Munger's long experience, self-control compounds just like money does, and the returns are equally remarkable. If this perspective is shifting how you think about investing, hit that subscribe button. Let's build rational wealth together, one principle at a time. Let me share a story that illustrates this principle perfectly. In the 1970s, a friend of Munger's made an absolute fortune in oil stocks. He was certain, absolutely convinced, that energy prices would rise forever. The math seemed to support his thesis. The trends were clear. So he mortgaged his house to buy even more shares, leveraging his success to amplify future gains. When oil prices collapsed unexpectedly, he lost everything, including the house his family lived in. He didn't fail because he was unintelligent. His analysis wasn't fundamentally flawed. He failed because he couldn't imagine being wrong. He failed because he confused a probable outcome with a certain one. That's the silent killer in investing, the thing that ruins more portfolios than market crashes ever do. Certainty. The more absolutely sure you are about something, the closer you probably are to disaster. The more convinced you become that you've figured it out, the more vulnerable you become to reality surprises. Charlie Munger and Warren Buffett built Berkshire Hathaway by constantly assuming they could be wrong. Every analysis they performed started with one fundamental question. What if this goes south? What if our assumptions are incorrect? What if the future doesn't unfold as we expect? Which of Munger's principles do you find hardest to practice in your own investing? Let's discuss in the comments. That's precisely why they preferred simplicity over complexity. It's dramatically easier to survive when your bets aren't fragile, when your financial structure has redundancy built in. The intelligent investor builds redundancy, not bravado. He leaves substantial room for error. He understands that avoiding ruin matters infinitely more than chasing maximum returns. Because once you're out of the game entirely, once you've lost your capital, you can't compound anymore. And compounding is where all the magic actually hides. So stop trying to look smart to other people. The market doesn't care about your ego or your need for validation. It only cares about whether you can survive your own foolishness long enough for time to work its magic. You'll never be right all the time. Nobody is, no matter what they claim. But you can make absolutely certain you're never fatally wrong. Munger saw plenty of people go broke chasing brilliance, trying to be the smartest person in the room. He saw very few go broke by being cautious, rational, and a little bit boring. If you learn to avoid stupidity consistently, methodically, the million will largely take care of itself. It just requires time and the patience to let common sense beat complexity. Remember this as you build your portfolio and plan your financial future. The goal isn't to be the smartest investor in the room. The goal is to be the last one still standing when the music inevitably stops, when the boom turns to bust, when reality reasserts itself. If you can't delay gratification, you'll never be rich. That's not philosophy or motivation. That's pure mathematics. The intelligent investor's greatest weapon isn't a sharp analytical mind or access to insider information. It's a strong spine. It's the ability to say no to what everyone else is saying yes to, and to wait longer than others can stay excited. Most people fail at wealth building because they fundamentally can't stand to wait. They want the reward before they've earned the right to receive it through patience and discipline. They'll chase any get-rich-quick scheme that promises speed and convenience. Cryptocurrency promising exponential gains, penny stocks that could be the next big thing, artificial intelligence startups with no profits, real estate bubbles driven by cheap credit. You name the trend, and there are people rushing in without thinking. They forget entirely that compounding doesn't reward excitement or activity. It rewards endurance, the ability to stay the course when staying feels like doing nothing. Warren Buffett once explained this with perfect clarity. You can't produce a baby in 1 month by getting 9 women pregnant. That's exactly how most investors behave. They're constantly trying to compress time, to cheat nature, to get results faster than reality allows. Nature doesn't care about your impatience. The market doesn't either. They operate on their own timeline, and fighting that timeline is expensive. Charlie Munger made his first meaningful money not because he discovered a shortcut, but because he finally stopped looking for one. You don't reach $1 million by jumping frantically from trend to trend, from strategy to strategy. You reach it by sitting through boredom, sitting through volatility, sitting through temptation, all without doing something catastrophically stupid. The world tells you constantly to optimize every minute, to hustle harder, to make your money work harder for you. Most of that advice is complete nonsense. Money doesn't grow because you're busy or active. It grows because you wait patiently while others panic and make emotional decisions. The ability to delay gratification, to defer consumption, to resist impulse, and to stay the course is what fundamentally separates the truly intelligent investor from everyone else. And it has almost nothing to do with intelligence in the traditional sense. Munger met plenty of highly educated fools during his long career. They could quote Keynes fluently, run complex regression models, and build spreadsheets that would make your head spin with their sophistication. But when the market fell 20%, they sold in panic. And when it subsequently rose, they bought again right at the top, driven by fear of missing out. A child following a simple strategy could beat that performance simply by waiting and doing nothing. In the 1950s, when Munger was just starting out in his investment career, he learned to genuinely love inactivity. Not laziness, which is completely different, but deliberate restraint. He studied great businesses carefully, bought them at fair or reasonable prices, and then he let time do the heavy lifting. It's not glamorous work. It's not going to generate headlines or make you the center of attention at parties. But 30 years later, consistently applied, it makes you genuinely rich. You can't become wealthy by outthinking everyone else in the market. That's a game very few can win consistently. You get wealthy by outwitting them, by making better decisions, yes, but mostly by outweighting them. The problem is that waiting feels exactly like doing nothing. And doing nothing feels like failure in our action-oriented culture. That's precisely why most people sabotage themselves halfway to their goal. They tinker unnecessarily, they trade when they should sit still, they adjust their strategy because staying the course feels too passive. They turn a solid plan into a fragile one because their ego can't tolerate stillness. Munger once told an audience something profoundly true about human nature. The world is not driven by greed. It's driven by envy. And envy has absolutely no patience. It wants what others have immediately, without effort, without the waiting. But envy is pure poison to compounding because compounding thrives only in environments characterized by patience and discipline. If you want to reach $1 million, then learn to live meaningfully below your means. Ignore what the neighbors are doing. Forget about the new car that would impress people, the luxury trips that would generate social media likes, the status games that consume so much energy and money. Because every single dollar not wasted is a soldier in your compounding army. And every impulse you successfully resist adds another year of life to that army's campaign. In the long run, wealth is far less about income level and far more about restraint. Munger knew people making millions annually who were perpetually broke, always spending slightly more than they earned. And he knew quiet, seemingly ordinary folks who became millionaires simply by saving consistently, investing wisely, and waiting patiently. The difference between these groups wasn't luck or intelligence. It was temperament, the ability to control impulses that everyone feels. If you can learn to do nothing intelligently, if you can resist the constant urge to act when action is unnecessary, you've already beaten 90% of investors. So if you're still wondering how to make your first million, here's the unglamorous truth that Charlie Munger would tell you directly. You don't earn it through brilliance. You wait for it through discipline. If you can't do 5th grade math, you probably shouldn't be investing at all. And if you can do it but refuse to follow what it clearly tells you, then you definitely shouldn't be investing. People make money sound incredibly complicated because complexity hides their ignorance and justifies their fees. But wealth, like gravity, is remarkably simple if you respect the arithmetic underlying it. Let's walk through this slowly and clearly. If you save $10,000 every year for 30 years and compound it at 10% annually, you end up with approximately $2 million. Not a fantasy, not a secret known only to the wealthy, just basic mathematical reality. Now, ask yourself honestly. How many people actually do that? Almost none. Because saving $10,000 every year means saying no to an enormous amount of nonsense for a very long time. And people hate that word, no, more than they hate being broke. Everyone wants to be rich eventually. But almost nobody wants to be rational today. The intelligent investor isn't chasing magic or secrets. He's simply obeying arithmetic. He understands that the world fundamentally runs on numbers, not emotions, or wishes or hopes. When Munger said to avoid stupidity, that's not an insult directed at anyone. It's an admission that financial ruin is usually self-inflicted. People destroy their own wealth not because of inflation or interest rates or bad luck, but because they won't do what basic math clearly tells them. They overpay for assets, they overborrow against their future, they overestimate their ability to predict what comes next, and they underestimate the sheer power of compounding given enough time. In his younger days, Munger watched people leverage themselves to the absolute limit during every economic boom. They thought they were being clever, using other people's money to amplify gains. They thought borrowing at 5% to potentially earn 10% was smart finance. Then the economy sneezed, conditions changed unexpectedly, and they lost everything they'd built. If they had simply done the arithmetic on risk, on what happens when leverage works against you, they would have seen disaster approaching. Charlie Munger and Warren Buffett built their enormous fortunes by staying completely allergic to complexity. They didn't buy what they couldn't understand, no matter how promising it appeared. They didn't forecast what fundamentally can't be known with certainty. They didn't depend on miracles or best-case scenarios because arithmetic doesn't lie, even though optimism frequently does. You can't compound something that doesn't exist. You can't invest successfully if you're simultaneously paying 20% interest on credit card debt. And you certainly can't reach 1 million if you're spending like a millionaire before you become one. In the real world, the shortest path to genuine wealth is almost painfully obvious. First, spend less than you earn, creating a surplus. Second, invest that difference wisely in productive assets. Third, let compounding do its work over decades. That's it. That's the entire formula. But most people would rather chase excitement than results. They'll complain that 10% annually is too slow. Too slow compared to what, exactly? Compared to going broke. Compared to losing everything in a speculative bet. There's a reason casinos consistently make money year after year. They understand human psychology and human math better than humans typically understand themselves. They know that people would rather feel lucky than be disciplined. They know that excitement sells better than patience. So here's Munger's advice, stripped of all decoration. Stop pretending you're special or different. You're not going to beat arithmetic through cleverness. You're not going to outweak compounding through activity. You're not going to successfully time markets over and over. But you can behave sensibly for decades, and that's genuinely enough. If you simply compound a reasonable sum at a decent rate for a long time and never blow yourself up completely, you'll get rich. Not Buffett-level rich perhaps, but rich enough to be free from financial stress. That's what the first million really represents in practical terms. Freedom. The ability to stop doing dumb things because you finally have enough margin to think clearly without panic. The path there is simple in concept but not easy in execution because it demands that you accept boredom, delay gratification year after year, and respect basic math when everyone around you is busy ignoring it. So if you want to know the real secret to wealth, don't look for hidden formulas in expensive courses. Look in the mirror and ask yourself one honest question. Can I follow arithmetic better than I follow my emotions? If the answer is yes, you're already ahead of 95% of investors. The rest are still out there searching desperately for magic in a world that's ruled entirely by math. Everybody worships compounding when you mention it. Almost nobody respects it enough to actually let it work without interference. They call it the eighth wonder of the world, and it genuinely is if you can sit still long enough to witness its full power. But here's the catch that most people never grasp. Compounding doesn't just multiply your money over time. It multiplies your behavior, whatever that behavior happens to be. If you're disciplined and patient, it rewards you exponentially. If you're foolish and impulsive, it punishes you exponentially. It's exactly like gravity in that way. It doesn't care who you are, what your intentions are, or how smart you think you might be. It only cares what you actually do. Let me tell you what most people never truly grasp about compounding. The real power doesn't show up in year 1 or even year 10. It shows up when everyone else has already quit, when the majority have given up and moved on to the next thing. That's precisely why most investors never see compounding's full magic. They give up right before the exponential growth phase starts, right before all that patience would have paid off. It's like planting a tree and then digging it up every few months to check if it's growing properly, then complaining that trees simply don't work. Compounding demands two things that most people never successfully combine. First, faith in arithmetic, in the mathematical certainty that consistent returns compound over time. Second, patience with human nature, with your own tendency to interfere and second-guess. Charlie Munger and Warren Buffett sat on certain investments for literal decades. Sometimes nothing visible happened for years at a time. The stock price barely moved. No excitement, no validation. Then one day the numbers started exploding upward, and that was compounding finally revealing its secret. Time doing what effort and activity never could. But human beings are fundamentally built for motion, not stillness. We crave action and drama. We want to feel like we're doing something important and productive. The intelligent investor learns to systematically kill that instinct because compounding is like a silent partner. It only works optimally when you stop interfering with it, when you leave it alone to do what it does naturally. Munger said it many times in different ways. The big money is not in the buying or the selling, but in the waiting. Every fool knows how to buy something. Some even develop a sense for when to sell. But almost no one truly knows how to sit still and wait. You can't hack compounding or shortcut it. You can only submit to it. You can only protect it from your own worst impulses. That means no unnecessary trading that generates fees and taxes. No chasing fads that erode your capital. No panic selling during inevitable downturns. No excessive greed during booms when everything feels easy. The biggest risk to compounding isn't inflation or interest rates or market volatility. It's you. It's your inability to leave well enough alone. If you interrupt the compounding process every few years because your emotions got louder than your logic, you're essentially starting the entire game over each time. When you touch your portfolio out of boredom or fear or greed, you're cutting the roots of your money tree before it has a chance to bear fruit. Charlie Munger watched brilliant men ruin 50 years of careful work in one terrible decision. All because they couldn't tolerate a few months of inactivity or uncertainty. They forgot that time is simultaneously the enemy and the ally, depending entirely on how you treat it. In investing, patience is dramatically more powerful than brilliance because brilliance burns out. People get tired, make mistakes, overreach. But the compounding of character, your ability to stay rational and humble and restrained year after year, is the only compounding that truly lasts forever. When people asked Munger how long it takes to see real results, he told them something profound. The market is designed to transfer money from the impatient to the patient. And it never stops doing that. You'll see people making millions seemingly overnight during booms. And you'll watch them lose it the week after when conditions change. They'll brag loudly during the good times and disappear quietly during the bad times. Meanwhile, the quiet, patient investor just keeps building wealth. Not fast, not flashy, but permanently and sustainably. Compounding doesn't require brilliance or genius. It requires endurance. And endurance comes directly from humility, from the ability to admit you don't need to act every single day. So if you ever feel genuinely bored by your investments, that's probably an excellent sign. It means you're finally doing it right. Let the market entertain other people. You focus on letting arithmetic and time do their quiet dance together. Because compounding isn't magic at all. It's math practiced with patience. And the longer you successfully stay out of your own way, the richer you'll inevitably become. If you want to know who ruins most investment plans, go look in the mirror right now. It's not the Federal Reserve or their policies. It's not Wall Street and their schemes. It's not politicians or inflation or recessions. It's you. The enemy isn't out there in the external world. It's between your ears, in your psychology. The average investor doesn't lose money because of bad markets. Markets go up and down, that's what they do. He loses money because he can't control his own psychology when the market behaves exactly like it always has, irrationally and unpredictably. When people talk about investment risk, they typically imagine numbers and graphs and volatility charts. That's not real risk. Real risk is you making emotional decisions at the worst possible time. It's your ego telling you confidently that you're smarter than the crowd right before the market reminds you brutally that you're not. The first hard lesson Munger learned about ego came in the 1940s, long before he met Warren Buffett. He watched a man who'd made an absolute fortune during a bull market lose everything in just 6 months. The man wasn't stupid by any measure. He was proud. He thought his success meant he could predict the future reliably. But markets don't reward pride. They punish it severely and quickly. You don't control outcomes in investing. You only control behavior. That's it. Everything else is noise and distraction. The illusion of control is seductive and dangerous. It makes people believe they can manage uncertainty perfectly. They can't. All they can manage is how they respond when uncertainty inevitably shows up. That's why Munger always said bluntly, if you're easily swayed by emotion, you have no business in the stock market. Ego and envy are particularly destructive forces. Ego makes you take risks you shouldn't take. Envy makes you chase returns you don't understand. Both guarantee you'll eventually hand your money to someone calmer and more rational. Munger never met a person who got rich because of envy. But he met plenty who went completely broke because of it. When your neighbor buys a flashy car or brags about his cryptocurrency gains, remember this fundamental truth. He's not your competition at all. Your only real competition is the version of yourself that might panic under pressure, overtrade out of boredom, or try to prove something to people who don't matter. Charlie Munger and Warren Buffett never envied anyone's returns. They just wanted to avoid stupidity consistently. That was their entire strategy, and it worked spectacularly well. They didn't care if others got rich faster or made bigger headlines. They cared that they'd still be wealthy and solvent when the music eventually stopped. Most people can't tolerate that kind of patience because it bruises their ego. They want to feel smart right now, today. They want validation and praise, not results that take decades to materialize. They'll chase short-term wins just to feed their pride. And every time they do that, they sabotage their long-term compounding. If you think investing is primarily about intelligence, you've completely missed the point. It's about temperament. It's about the ability to remain sane and rational while everyone around you is going insane. When others panic and sell, you stay calm and perhaps buy. When others brag and get overconfident, you stay humble. When others act frantically, you wait patiently. That's the discipline most people never master because it requires suppressing the very emotions that make us human. Every investment mistake you'll ever make will have one root cause when you examine it honestly. Emotional overreaction. Pride, fear, envy, greed. 4 horsemen that consistently trample rational thought. The intelligent investor understands deeply that humility is armor. He accepts uncertainty as part of reality. He welcomes boredom as a sign of stability. He embraces not knowing the future because once you surrender the illusion of control, you can finally behave rationally in a world that fundamentally isn't rational. Ego wants to win every battle and prove itself constantly. Rationality just wants to survive long enough for compounding to work. Only one of those approaches compounds successfully over decades. So before you analyze your next stock or investment opportunity, analyze yourself first and honestly. Because if you can't control your emotions, you'll never control your financial outcomes. That's not cynicism or pessimism. It's simply reality. And the sooner you accept that truth, the sooner you'll stop being your own worst enemy in the wealth-building process. If these principles are resonating with you, subscribe now. We're building a community of rational, long-term thinkers who understand that wealth is a marathon, not a sprint. If you want to get rich, start by asking how not to get poor. It sounds backward and counterintuitive, but that's exactly the point. Inversion is one of the most powerful mental tools Charlie Munger ever learned and applied. Instead of asking what will make me succeed, ask what will make me fail catastrophically. Then make absolutely certain you don't do those things. It's simple, it's unglamorous, and it works dramatically better than all the motivational content you'll find flooding the internet. When Munger looked at how people systematically destroy their chances at wealth, it's usually the same destructive pattern repeated endlessly across generations. Too much debt that creates fragility. Too much risk taken without proper compensation. Too much ego that prevents learning. Too little patience when patience is what's required. You don't need brilliance to avoid those obvious traps. You just need humility and self-control, two qualities that are free but rare. Munger spent his entire career trying to avoid stupidity rather than chase genius, because avoiding stupidity is dramatically easier and infinitely more reliable. Everyone wants the secrets of success, the hidden keys to wealth. Nobody wants to honestly examine the obvious causes of their failures. Inversion forces you to think about consequences and risks instead of fantasies and best-case scenarios. It's the opposite of what most investors naturally do. When Munger and Buffett looked at a potential business investment, they didn't start by asking, "How much money can this make us?" They asked different questions. How could this go wrong? What could kill this company? What could make us lose sleep at night? Because if you adequately protect the downside, if you avoid catastrophic loss, the upside generally takes care of itself over time. That mindset alone could save you from 90% of dumb financial decisions. Take a simple example. The man who leverages his entire portfolio because interest rates are temporarily low. He thinks he's being efficient with capital. He's really being suicidal with risk. Because when things turn bad, as they always eventually do, he discovers that debt compounds faster than wealth does. Or consider the investor who chases whatever is currently hot on financial television. He thinks he's staying informed and active. He's really outsourcing his brain to the herd. And the herd never gets rich collectively. You don't win by following fashion or trends. You win by avoiding folly consistently. When you invert a problem, you see it clearly for the first time, stripped of optimism and wishful thinking. If your goal is to reach $1 million, don't just ask, "How do I make $1 million?" Ask instead, "What mistakes would absolutely stop me from ever getting there?" Then deliberately build your entire life around never making those specific mistakes. That means don't borrow money for consumption that doesn't produce returns. Don't buy investments you don't genuinely understand. Don't interrupt compounding with panic or greed. And don't envy people playing dumber, more dangerous games than you're playing. Most importantly, don't lie to yourself about your situation. Self-deception is the most expensive luxury in the world. If you spend your life chasing comfort in the short term, your future will be genuinely uncomfortable. If you face discomfort early through saving and studying and waiting, your future will be comfortable. It's one of the oldest inversions there is. People don't fail because they lack intelligence or opportunity. They fail because they refuse to look at their own behavior under harsh, honest light. Munger called inversion the thinking tool of last resort because it doesn't flatter you or make you feel clever. It just tells you the uncomfortable truth about what you shouldn't do. And that's usually enough information to dramatically improve outcomes. So next time you're tempted by a new investment opportunity, ask yourself honestly, how could this blow up spectacularly? How could this make me look like an idiot 5 years from now? If the list of potential disasters is long, walk away without regret. That's not pessimism. That's prudence. Most fortunes are built not through brilliance or lucky breaks, but through consistent, deliberate avoidance of disaster. If you want a reliable roadmap to wealth, write down everything that could potentially ruin you financially. Then simply refuse to do any of it. That's inversion. That's intelligence. And that's how you quietly win while the world keeps loudly losing. People genuinely hate boredom. They think it means they're missing out on something exciting happening elsewhere. But in investing, boredom is often the precise sound of wealth being built quietly and sustainably. The world has convinced you that activity equals progress. That if you're not doing something visible, you're falling behind everyone else. That's a lie. one of the most expensive lies ever sold to investors. The stock market rewards patience and stillness, not motion and activity. And every time you act just to feel alive or engaged, you're feeding the brokers and the system, not your own balance sheet. Charlie Munger and Warren Buffett made most of their enormous money sitting on their hands, doing what appeared to be nothing. They bought a few genuinely great businesses, then did nothing for years or even decades. People laughed at them. Critics said, "You can't just hold forever, you have to be active." They said, "Watch us." And the critics did watch, usually with growing amazement. While those critics were busy chasing excitement and the next big thing, Munger and Buffett were busy compounding quietly and steadily. The problem with modern investors is they crave constant stimulation. Their phones buzz with notifications, prices flash across screens, dopamine spikes occur. They mistake noise for opportunity. They treat the market like a video game designed for entertainment. But genuine wealth doesn't come to the restless and active. It comes to the patient, the disciplined, the dull and boring. When you're genuinely bored with your portfolio, it's probably because it's working exactly as it should. When you feel that itch to trade or do something, that's usually the signal to stop and do nothing. The intelligent investor understands that most of the time, doing absolutely nothing is the correct move. Because doing nothing preserves the one thing compounding absolutely needs to work its magic. Time. Uninterrupted time. Munger saw it again and again throughout his long career. People destroy decades of careful work in one impulsive moment. They trade out of boredom or panic or envy, and then they call it strategy or portfolio rebalancing. Let me tell you something unglamorous but absolutely true. Getting rich is a slow grind. It's deeply unexciting. It's repetitive and monotonous. It's mostly waiting patiently for arithmetic to do its quiet magic over years and decades. If you want thrills and excitement, go to Las Vegas. If you want freedom and financial independence, learn to endure tedium without complaining. The world has developed a severe attention problem. Everyone's chasing novelty constantly, jumping from one shiny object to another. But the intelligent investor deliberately cultivates monotony in his financial life. He takes genuine comfort in predictability and slowness and doing the same sound thing over and over again without deviation. Because boredom in investing means you've successfully eliminated drama from your finances. And that's a form of peace most people will never know or experience. Every single day, thousands of investors check prices compulsively like they're checking blood pressure or heart rate. They think awareness equals control somehow. But watching your portfolio obsessively won't make it grow any faster. It's exactly like staring at a tree intensely to make it taller. The tree doesn't care about your attention. It grows at its own pace according to natural laws. Charlie Munger lived long enough to see excitement and speculation ruin more people financially than poverty ever did. The market is fundamentally a machine designed to transfer money from the active to the patient. And the impatient are always volunteering eagerly to participate in that transfer. You don't need to move fast in investing. You need to move right. And most of the time, moving right means standing completely still and doing nothing visible. You'll know you've truly matured as an investor when boredom stops feeling like failure or missed opportunity. When silence in the market feels comforting rather than scary. When you realize that calmness and wealth often grow together naturally. So don't seek excitement in your investment portfolio. Seek endurance instead. Don't look for an adrenaline rush. Look for results that compound over decades. Because the intelligent investor's real secret isn't brilliance or prediction or activity. It's the quiet courage to wait patiently when everyone else is running around frantically. Boredom is the tax you pay for compounding. And it's genuinely the cheapest tax in the world. Everyone wants financial freedom desperately. Almost no one wants to pay the price it actually demands. Freedom isn't free, not in money and certainly not in behavior. You buy it slowly through discipline. And discipline feels like pain and sacrifice long before it ever feels like reward or success. Most people want the results of discipline without the discomfort of practicing it daily. They want wealth without restraint, growth without patience, security without sacrifice. That's not how compounding works. That's not how anything worthwhile works. The intelligent investor understands deeply that every dollar saved today is a vote for freedom tomorrow. It's not about being cheap or miserly. It's about buying back your time before someone else owns it completely. When Charlie Munger was younger, he learned something elegantly simple. The man who spends every dollar he earns is working for his past decisions and past purchases. The man who saves and invests is working for his future freedom. You don't get rich primarily by earning more, though that helps. You get rich by needing less, by being content with less than you could afford. That's a truth nobody on Wall Street will ever sell you because they profit directly from your hunger and dissatisfaction. Freedom, in Munger's long experience, has very little to do with luxury and everything to do with independence. The ability to say no to people, to pressure, to bad deals, to stupidity. And that ability comes from discipline, decades of it practiced consistently. Munger saw plenty of high earners completely chained to their lifestyle. Nice suits, big houses, fancy cars, expensive vacations, and not a single minute of real autonomy. They looked rich to outsiders. They weren't rich at all. They were slaves to what they'd built, prisoners of their own consumption. Meanwhile, the quiet saver who drove the same modest car for 15 years and never tried to impress anyone was sitting on genuine freedom disguised as modesty. Munger respected that man infinitely more than any hedge fund manager with borrowed money and borrowed pride. The market rewards those who can delay gratification, not just for a few years, but for a lifetime. Because that delay is your leverage. It's what lets compounding do the heavy lifting while you stay rational and patient. Freedom has two distinct sides. The visible side everyone desires and talks about. And the invisible cost almost nobody wants to pay. The cost is restraint when it's easy to indulge. The cost is humility when it's tempting to boast. The cost is saying, enough, when the world screams, more, constantly. When people asked Munger how to become financially independent, he told them something so simple it sounded insulting. Spend less than you earn, invest carefully, avoid stupidity, and repeat it for 30 years. They laughed uncomfortably. They thought he was holding back a secret, some hidden strategy. But that was the secret, the entire secret. The road to $1 million is paved with ordinary days done correctly. It's built on decisions so small and boring that no one notices them until decades later when the results become undeniable. You won't see wealth happening in real time. You'll just wake up one day and realize your habits quietly bought you the one thing money was supposed to buy all along. Control over your own life. That's freedom. Not yachts or mansions, not watches or applause, just the quiet ability to stop playing stupid games with your time and energy. If you ever wonder whether discipline is worth the sacrifice, think carefully about the alternative. Dependence. Dependence on a job you hate, on markets you can't control, on luck that never lasts, on other people's decisions about your life. Discipline is costly in the short term. But dependence is absolutely fatal in the long term. So pay the price willingly. Be boring. Be consistent. Be patient year after year. Because freedom doesn't come from brilliance or luck. It comes from the dull daily courage to do the right thing when nobody's watching and when it doesn't feel rewarding. And when that first million finally arrives, not as a miracle but as a result, you'll know exactly why so few people ever get there. They wanted freedom desperately. They just couldn't handle the discipline it required. Here's the truth nobody wants to hear, the truth that makes people uncomfortable. Wealth doesn't just go to those who want it badly. It goes to those who deserve it through behavior. And deserve isn't about luck or intelligence or connections. It's about behavior and character built one rational choice at a time. The intelligent investor's road to $1 million is not paved with genius ideas. It's paved with restraint. He earns his wealth because he becomes the kind of person who can be trusted with it. That's the part people consistently forget. They want the million without becoming the person capable of keeping it. Money doesn't change who you fundamentally are. It amplifies who you already were. If you're foolish when you're broke, you'll be a disaster when you're rich. If you're patient, humble, and rational when you have little, you'll handle wealth just fine when it arrives. Charlie Munger saw plenty of people who made a fortune and lost it quickly because they never fixed the habits that made them fragile in the first place. They thought the goal was money, just accumulating money. They were wrong. The goal is character. Character is what keeps you from doing something catastrophically stupid when you finally have something substantial to lose. Wealth is simply a byproduct of long-term rational behavior. It's the scoreboard of patience, discipline, and self-control consistently applied. If you focus on those qualities, the money takes care of itself naturally. But if you chase money directly without earning the temperament that supports it, it'll slip through your fingers faster than you can count it. People think getting rich is primarily about knowledge or strategy. It's not. It's about habits. Save, invest, wait, repeat without drama or deviation for a lifetime. It sounds boring, and it absolutely is boring. But it's the kind of boredom that builds freedom. The first million teaches you who you really are underneath everything. It exposes every weakness. Your envy, your pride, your need for validation from others. If you survive that process intact, if you reach the million without destroying yourself emotionally or financially, you'll never look at money the same way again. Because once you learn how slow, quiet, and unemotional true wealth creation actually is, you stop being impressed by people who move fast and loud. You see through the noise. You realize the real game isn't about beating others at all. It's about mastering yourself. That's what Charlie Munger and Warren Buffett always understood at a fundamental level. They weren't competing with anyone else. They were just trying to get a little wiser, a little more disciplined, and a little less stupid each year. That slow improvement compounded just like money does. And in the end, it built something that luck alone never could. Durability. The ability to last through every market condition and economic cycle. So if you're still chasing your first million, remember this fundamental truth. The destination isn't really the prize. The process is. Because every dollar you save, every mistake you avoid, every temptation you resist, that's you becoming the kind of person wealth can stay with permanently. The world will always tempt you to act fast, to chase trends, to envy the noise and excitement. But if you can stay rational when others can't, you'll have an advantage that no algorithm or insider information ever will provide. Wealth favors the calm. And calm is born from wisdom, not from excitement or activity. So keep your head clear, keep your life simple, and keep your expectations grounded firmly in arithmetic, not fantasy. Because in the end, it's not about how fast you make $1 million. It's about whether you become wise enough to keep it and grow it further. If you can do that, if you can build the character that supports lasting wealth, you'll have achieved something far rarer than riches alone. You'll have earned peace of mind. The true dividend of intelligence. If this message resonated with you, subscribe now. Let's continue this journey toward rational wealth and clear thinking together. Tell me in the comments, what principle from this lesson will you apply starting today? I read every comment, and I want to hear how you're building your path to that first million. Remember, the intelligent investor doesn't win by being the smartest person in the room. He wins by being the last one still standing when the music stops, when the boom turns to bust, when everyone else has quit or blown themselves up. That's the real test. Not intelligence. Character. Not brilliance. Endurance. Not complexity. Simplicity practiced with discipline over decades. Charlie Munger's wisdom wasn't complicated or secret. It was simple, almost painfully so. But simple doesn't mean easy. Following these principles requires you to go against your nature, against the crowd, against the constant temptation to do something when doing nothing is right. That's the test you face every single day on the road to 1 million. And it's a test that most people fail not because they aren't smart enough, but because they aren't patient enough. Your first million is waiting for you. Not at the end of some complex strategy or secret formula. It's waiting at the end of 30 years of boring discipline. The question isn't whether you understand this intellectually. The question is whether you have the character to actually do it.